Ladies and gentlemen, welcome to another interesting topic for today again. Crypto 2023, mind your business. We will discuss the rapid developments of cryptocurrency and digital assets in Asia. Again, our fabulous moderator, Mr. Tom Higgins, founder and CEO of Goldeye and Crypto Switch. Welcome them on stage.
Thank you very much, everyone, and thank you for coming along to this session. We've got a really interesting panel today with some serious experts here. So if you want to know what's going on in the crypto space, this is the place to be. They're going to tell you what's happening. This is something that's really close to my heart. I've been involved in cryptos for about 4 or 5 years with some of our products in the space that we're operating in. And it's, as we all know on the panel and in the audience, it's changed so dramatically from the hype periods to collapse, rebuilding, sub-collapses, and just going round and round. But it seems to me to be coming together in some sort of sensible way now that the institutions and brokers and funds can access it in a way that is scalable and safe. And that is gradually coming together now. And this is what this really panel is looking at, is how can we access this market? How can you access this market in a safe way and not be riding the hype curve, because nobody wants that because you don't know where it's going to go. So if we could start with our panelists to introduce themselves and give us a little bit of a background, then that would be great. So do you want to start this end? Off we go then. So.
Hey everyone, my name is Brett. I head up Binance Link in Binance. My background's always been in trading across commodities, both physical and derivatives. I've been in Binance for the last 2.5 years. And Binance is a leading blockchain and crypto infrastructure company. We service millions of users. We have the largest trading volume on digital assets in the marketplace. And our mission is to increase the freedom of money. And it's very nice to be here.
Great. Hi, everyone. My name is Sagar Desai. I'm part of Coinbase's institutional sales trading and prime team. I'm based out of Singapore. My background is asset management. I started my career in asset management at Goldman Sachs. Did that for about 5 years before I pivoted to fintech. Before I joined Coinbase about 2.5 years ago, I worked at a tokenization platform. So really cut my teeth on tokenization or blockchain through that experience before I started exploring crypto. And really excited to be here and chat with you all.
Hello. Yep. My name is Lennix. I think my background all lies with OKX. I built OKX with the team from 6 years ago. Started from 6 in Hong Kong. My past life, mostly, I was a high-frequency trader in derivative side before we start OKX. But right now, I can never come back to TradFi for obvious reason. Right? Right now, the chief commercial officer are in OKX. So basically, my job is to make friends with anybody. That's it.
Hi everyone, thanks for having me here today. It's wonderful to be with all the panelists here today. So my name is Pamela, so I lead up sales in APAC for TALOS, which is a B2B institutional grade trading platform where what we do is we help traders manage their digital asset portfolios and also enable trading services for service providers to their end customers. So my background has always been in equities and in FX and been in the crypto world for the last 4 years. I think it's really exciting because as far as you know, if you are in crypto for 4 years, it actually feel a lot longer than that. So yeah, happy to share whatever we have today.
Well, thank you very much, everybody. And I think the first thing that's obvious to notice is that you've all come from what I would call grown-up real backgrounds. So you know your stuff. You know how the world works. You know how to make an institutional product that is actually going to be reliable and scalable. So the first area I wanted to talk about, which we are seeing a great deal, is separation of responsibilities. So in the traditional institutional world, you generally have separation of, say, custody, credit, settlement, execution, and you'll have prime brokers and custodians to do all that sort of stuff. Now, originally, we didn't see that at all, but we're starting to see that more and more. So where do you think this will go? Where do you think the use of sort of prime brokers and separate custodians will go, as opposed to having one entity that does absolutely everything? Because both models are operating at the moment. So open that to the panel, to anyone who wants to ask that. Answer it.
Yeah, maybe I can just start by just taking a step back to understand really why people are moving towards this kind of separation, right? But I think if you look at it 5 years ago, crypto really started out from retail, right? And there is no institutional toolkits like custody, credit intermediation, or trading platforms. So a lot of retail-focused exchanges has to build a lot of this technology in-house because it's not something that they can rely on a third-party vendor to help them to do that. But as the market evolves and institutional adoption actually accelerates, that's where we start to see people looking for familiarity in the setup that they are used to from FX and equities because they want to do things in the big boys way, right? And I think back to Tom's question, I think this will continue to stay because this is actually what is required to keep this asset class more matured and to do things the right way.
Thank you. Has anyone else got any comments on that?
I have a slightly different view in the sense that I do think we would be missing out on the power of blockchain, the power of distributed ledger technologies, if we just mirror what is available in traditional finance onto crypto. Because then what is the point of crypto? If we are going to replicate the same things that we did 100 years ago or whatever, not 100 years ago, but 50 years ago, then there is no thesis or premise behind crypto. I think there are some functions which will require a certain separation of responsibilities, but then there are certain things that can be made more efficient using blockchain. So for example, if you're able to tie in multiple functions using data from multiple entities, just to ensure that your clients are getting more efficient data, I think that's using blockchain to make it more efficient, as opposed to if you were to sort of mandate that it has to be done with different entities, then you are essentially losing out on everything that blockchain promises. So I think it's a mixed response. There is no one single way to do things. There are some firms that will want to mirror what is happening in traditional finance today. And then there are some firms that may want to actually leverage on blockchain and make it more efficient.
I was going to say, I think you summed it up quite nicely. A lot of it would probably be my view as well. One thing that you mentioned, Sagar, is we don't want to mandate it. I think that the market is really still at its infancy stage at this point in time. And I think from Binance's perspective, we'll focus on what the users want to do. So what they're telling us, we're constantly getting the feedback off. And we're not going to dictate it into a certain way. But at the same time, we have to listen to them because they're who we serve. And that's probably going to be the same across everyone here. So as we've seen, and as Pamela said, we've seen custodians come in that were never there originally. And so now we've started to integrate with those companies. Binance is integrated with this company called Sifu. And that's a pure custodian. And those companies are driven by the user needs, and we'll follow what the users want to do.
Yeah, I agree. Actually, quite agree on. So we cannot replicate all the components that are available in TradFi right now. So I understand we got to segregate between trading engine or proper custodian and proper clearing house as well. But for example, in a very practical manner, a lot of them is not available. So we talk about, for example, custodian, right? Everyone want to. It's naturally think that if we put money in a custodian and you subsequently trade on exchange, it's a natural setup. But the fact is, even the custodian right now is not exactly ready. The custodian that usually work in bank, usually work in other TradFi, is actually not fit in the exchange model. Give you a very simple example. In OKX, we call the concept called portfolio margin. In certain contexts, we got negative balance because you're borrowing cons from using your collateral. But the custodian simply doesn't really understand what's the concept of negative balance in the concept. So there's a lot of kind of technical details operation that we need to talk about. And also the prime brokerage, right? The reason that prime brokerage exists in TradFi is give you easy access to multiple markets, especially security and equity markets. And also they're mostly a bank that can give leverage. But in crypto, it's most likely an execution platform, SOL platform, because exchange kind of like trade similar thing across the time. And if they give leverage, it add additional risk to the user. So the prime brokerage model in crypto is somewhat different than equity markets. But I also endorse that a lot of technology that we can have right now, or for example, if you want to verify whether or not you have money situated in exchange right now, there's a technology called proof of reserve. Cryptographically audited, happen audited every single month. In somewhat level, is even bringing more transparency than TradFi standard.
I think it's very interesting that what we're saying is we shouldn't just replicate the past, because technology advances that have come with blockchains and I think particularly smart contracts can mean you don't have to do something. So in the past, if you wanted to, say, buy a house, you'd use a solicitor with an escrow account. You'd put money in and someone would have to oversee making sure the money went to the right place and the house deeds went to the right place. If you're using a smart contract and it's happening atomically, it's not even an issue. You can't have one and not the other. You know, the swap happens automatically. So we're going to end up, I think, with an institutional model that has best of both worlds. So we use the right technology from the blockchain type things, but we also have what the institutional world is comfortable with, because we've got to bear in mind is that if we want the banks and the existing institutions to play, they have to be comfortable, and it takes them a very, very, very long time to be comfortable with things, and so we're going to have to do some of that sort of stuff. This leads nicely into the next area, which is regulation. Regulators are obviously even more aware of everything that's happened in the past with traditional finance, and they really want to be able to regulate something in a way that they understand. And I think they find it quite difficult to understand what's going on our crypto world, because it's so new. It's moving so fast, it's difficult for anyone, even in the market, to keep up exactly what's happening with it, especially in the DeFi world. So how is regulation going to happen? Is it going to help the market? Is it going to hinder the market? Is global regulation going to be joined up, or is it going to be very different in different parts of the world and create a regulation arbitrage? What do we think about that?
Sure, I can start with because we're getting license everywhere in the progress this year. This is one of the focus. French, Australia, Hong Kong, Singapore, Dubai, Bahamas. So everyone called themselves, they got some kind of crypto regulation. The very first thing they can see after FTX incident is everyone catch up. The regulators catch up in terms of, hey, I got to do something. I got to have a much more transparent and clear-cut regulation related to this industry. That's a good thing. So that for a couple of years, we do, as an exchange, we do have some license to apply. And to answer the question, whether that they would join up or what's a good or bad to the system, to the industry as a whole, or I would say in a longer term perspective, probably yes, because for one simple reason is, if you secure proper license with proper standard that a lot of TradFi players that understand, you will get a bank account for your client access, for your client money, legally, easy. So that would, with that license, you can build seamless transaction between banking sector and the crypto sector. Is tremendous importance to crypto industry, because right now we kind of rely on stablecoin or even regular stablecoin become the middleman. But we need the bank that bring in our standard, talk your standard to the client, which is TradFi player, that, hey, this guy is having similar regulatory standards as you and of your client too. So probably you can consider that into your client portfolio.
Okay, thank you very much. Now, Brett, I don't know whether you've got a view on this, because being with such a large company, there's a lot in the press about what goes on in Binance. And there's been discussion recently about Singapore license, UK license. So obviously there's quite a lot going on with regulation within Binance. How are you seeing this?
I think you're right. I think it's been quite a trying time within the industry. As Lennix said, after FTX, we saw a greater need for it, or at least the policymakers really needed to catch up at that point in time. And I do understand what Lennix is saying on bank accounts and the other ways to increase adoption. I think from a regulator's perspective, they are looking to what you said, Tom, on what they currently know and what has worked in the past. So from Binance's perspective, we really want to work with all market participants and really with regulators, because we see that users are wanting clarity on what happens in the space. Every time that there's a change, they don't know what's happening. So they're looking towards the industry as a whole, everyone over here, to be able to give that clarity. I think in terms of regulators, and Binance definitely believes that regulation in the long term will be better for the industry and have more user adoption. We're working with the regulators in that side. And I think in terms of the speed of it, is those regulators that are willing to move faster are the ones that are going to bring greater clarity to the users, and therefore they're going to be a little bit ahead of the game in that respect.
Okay, thanks very much on that one. So we've sorted out how we're going to use the best technology. We're going to have some segregation of responsibilities, but using the right technology. We're going to get sensible regulation. The next one, I think this is probably for Pamela to initially answer, is all about liquidity sources. So there are multiple sources of liquidity available. If you are a fund or a broker and you want to trade, you can have lots of exchanges you aggregate together. You can have lots of market makers, or OTC as it's often called, together, or a mix of the two. What's the best way to access all of the coins with deep liquidity?
So to your question, I think having a good mix of liquidity is always good. More liquidity gives you better prices, right? But I think the question that you want to ask yourself as an institutional firm is, what do you want to offer to your customers? And also, what are the edge that the business that you have, right, as compared to other competitors that are doing the same thing for you. So I would say, because even for regulated venues, if you decide to go on the regulated path, there are also many, many different options. So you kind of need to think of what are some of the key considerations. I'll probably say 3. One of it is to think about the type of coins you want to offer to your customers, because there are major coins where some of the exchanges do it better. There are also alternative coins, right? And if you want to do a mix of both, then you need a good stack of liquidity providers that could do both, right? Second thing is on-off ramp, right, into fiat. Basically, whether do you want to offer on-off ramp into USD settlement or even local currencies like Thai baht, Hong Kong dollar, Sing dollar. And that's where you need to consider local exchanges that have these banking rails to facilitate all these settlements. And the third part, I think a lot, is the settlement model, right? I think in crypto, it's very different, because on exchanges, you have to pre-fund, right? Are you used to pre-funding different amounts of money in different parts of exchanges, or do you want to work with market makers that give you end-of-day settlement or T+1 settlement, or even possibility using a prime broker, right? And ideally, if you can have a good mix of both that allows capital efficiency between exchanges and prime brokers, then I think that's also where you decide who you want to pick and choose in terms of your liquidity sources.
Okay, thanks very much. And have any of the exchanges got any opinion on this one?
Well, come to Coinbase to begin with. I think it's important to think about the counterparty risk as well. When you're sourcing liquidity from the different venues that you are sourcing it from, and we obviously work with many traditional financial institutions that want to offer crypto trading to their end clients. One of the biggest reasons why a lot of them tend to work with Coinbase, at least I can only speak to Coinbase, obviously, is their perception of counterparty risk. is the party that you are dealing with regulated, licensed, has the right controls in place, has the right risk management practices in place, has the right human capital that can support your business. So all of those elements funnel into counterparty risk. And I think that is crucial, especially if you are just starting out on your sort of crypto trading or crypto execution journey as a traditional financial institution.
Thank you very much on that one. If we now move on to another interesting area. So I was at a crypto event in the UK run by the FT, and almost everyone on every panel was American. Which was surprising, seeing as we were in the UK, and also surprising, seeing as the USA seems to hate crypto more than anything in the whole world. So they have an incredibly negative stance, and they're trying to kill it. It seems to be there, but there's so many companies there. So, will this US hatred of crypto, is that going to spread around the world, or is this just a US thing? How will that affect the global market? And do we need to worry about it outside of the States?
I can start, given that we are a US publicly listed company. In our view, I think we, obviously, in every jurisdiction that we operate in, we want to make sure that we are complying with the laws of the land, which we have done, or at least tried to do so in the US as well. Our firm belief is that the US regulators will get it right eventually. And given the fact that the US regulators have traditionally been extremely active in ensuring that there are right regulations or correct regulations for the traditional financial institutions, I think eventually they will get it right for crypto as well. As crypto becomes more and more institutionalized, as in just yesterday we saw major traditional financial institutions enter crypto markets in a big way. As more and more US Wall Street firms enter crypto, it will almost become mandatory for the US regulators to come up with the right set of regulations for crypto to thrive. So from my perspective, the regulators will get it right eventually.
Yeah, to add, I think I won't call it U.S. hatred. I think it's basically all the regulators like that. They want to regulate something that they understand and they get comfortable with. Yeah, people are talking about, hey, maybe in a very contrast news that Hong Kong is getting a lot better in terms of regulation. Is this something a sudden change of appetite? I don't think so. Based in Hong Kong, what I can feel is they come up this framework on the very first day that they're already very comfortable with. They're already using the traditional framework and add a little bit crypto element, right? In the Hong Kong framework, basically copy the security brokerage framework plus exchange license plus crypto specific element. So at least 80% of elements they already get very comfortable with, and they all the well-crafted rules and regulation. So for the US regulator to get right, it's basically the same. They want to craft a related regulation that they at least understand and be very comfortable with using the existing framework for like 8%, then adding 3% of the crypto element. Then you can get your crypto business industry going. So yeah, the big guys already coming, starting from Bitcoin, BTC, maybe start a good extension probably in a spot. We will extend to more crypto asset class.
Yeah, I mean, it may be because it's something new, and when something new comes along, people get a bit frightened about it. And it's different countries do have a different way of approaching things like this. In the UK, we would probably sit back, listen for a while, and they say something. The US is more say something first, shoot first, think later. say something first, let everything mull around, everyone talk about it, and then sort it out later on. As long as it doesn't go the way of retail FX, where they basically made it impossible to have a retail FX broker in the States unless you've got an awful lot of millions of dollars. So that's why there's almost none, because it's extremely difficult to set one up and operate one there. But so thank you very much for that opinion. I think that's very interesting. Next area I want to look at is wallets. So we've covered all of the liquidity access, having a single access, having an aggregated access. We've covered looking at regulation, how that's coming along. We've covered separation of responsibilities. But looking at wallets, so where should we keep our money? And should we be worried about the security of wallets with historic hacking having gone on and lots of money having been lost due to all sorts of different reasons and very poor exchanges initially having lost lots of money? So how do we need to worry about that, where we keep it, and what can we do to make it easier and safer for our customers here?
Lots of crypto-related hacking incidents. Yeah, the amount is huge, right? If you talk about historical context, starting from exchange got hacked, small exchange got hacked, then gradually migrate to protocol, the apps got hacked, and then got cross-chain bridges got hacked. So even the hack is evolving at different kind of level. So the good thing is the hack is looking for the vulnerable part of the industry to get hacked. The very difficult part to hack right now, I think, is probably the exchange. All the exchange has been battle tested for so many years for different kind of vulnerability loopholes. So I think one of the things that you can consider is putting the money in the big exchange. I think it's really comfortable to right now it's getting a lot more especially right now a lot of exchange got regulated. One of the key part of the regulation is to disclosing your vulnerability attack, penetration tests, and also what we call your historical record on cybersecurity. So if you don't really feel comfortable on that, probably you can rely on self-custody wallet. But the experience right now in self-custody wallet is a lot better than before, than previously. So like we make a kind of like OK's wallet, self-custody for the user. You can integrate all kind of chain. So if you really get, so my simple one-stop advice is start from a small money from exchanges, then start to learn about a self-custody wallet, then start to migrate yourself maybe to purely defined type of degen style wallet.
If I can add, I think from a different perspective, right? I think at TALOS, because we are in a vantage point where we see all the flow coming through, whether it's buy side or sell side. So from the perspective of a buy side, it's usually your trading firms, your asset managers, and family offices, right? And to them, I think one of their biggest risks is actually counterparty risk, right? And they also learn from a lot of past incidents about exchanges and things like this. So to them, I think one reason why at TALOS we are agnostic in terms of the custody providers that we work with is we don't believe that there's one set of custody provider that you have to use, right? You will always have some coins that will park on exchanges. You will have some coins on cold storage. You have self-custody because you need to move funds across different capital efficiency between exchanges. I think that's on the buy side where generally, I think because they are more accountable to investors and client funds, they would more prefer to work with a more regulated custodian for cold storage. Then if you look another step on sell side, that's where it's your brokerages, your OTC dealers and things like this. So to them, a lot of their custody structure is actually tied to regulations, right? If you look in Thailand, you have to do 90% cold, 10% hot, right? So that's where I think where Lennix come in. You have to decide that infrastructure that works for you and your operating model, whether you want to go self-custody or whether you want to do like a third-party custody provider. So I think they are more tied to regulations because to be regulated, there's certain kind of infrastructure you have to follow.
Thank you for that. So basically, you should use the right sort of wallet infrastructure for what you're doing. And maybe this is a thing people don't need to worry about anymore. It's like, I've had an electric car for many years, and people always think, who don't have electric cars, you worry about range all the time. Actually, when you've got one, you don't worry about range. It's not something you really think about. And it's a similar thing here. Maybe this is a problem of the past, and as Lennix said, it's been so battle-tested. Everybody should have really, really good cybersecurity training of all their staff and good cyber technology as well to protect themselves. That's probably the biggest risk to your business than anything else. If I could ask you to start thinking about questions you're going to ask in about sort of 5 or 6 minutes. So think of a question now, and it would be great if you could have one so that we can ask these great people here to educate you. One area I'd like to touch now is there's a lot of retail brokers who are here. I mean, this is a sort of a prime area for this conference. How can a retail broker actually access this market? So they've got their retail clients trading on a platform. Maybe it's MetaTrader, maybe it's CTrader, maybe it's a proprietary platform or something else, Match Trade, lots of different things. How can they actually access the markets? What do they do technically to do this, and who do they need to engage with to do this?
Sure. So obviously at Coinbase, we have a pretty well-known prime brokerage platform, Coinbase Prime. So we tend to work with lots of introducing brokers, if you will, that plug into Coinbase's prime platform, source liquidity from us, custody their assets with us, get financing from us for post-trade settlement, any sort of, so that they don't have to pre-fund their trades. So it really, again, depends on what the business model is. We tend to work with introducing brokers in local jurisdictions across APAC that want to partner with Coinbase for their trading execution requirements and then offer it up to their retail clients. So that's one way of working. I've also seen clients work with a platform like TALOS, where they're sourcing liquidity from multiple different platforms, custodying their assets with multiple different platforms. So it really, again, boils down to the business model that you want to that you want to have as part of your firm.
If I can add, I think for retail brokers, number one, think about the products that you want to offer. Even if you talk about crypto, there are things like crypto CFDs, right? And generally, that's a lot more straightforward for FX brokers because it's easier to get liquidity from your existing FX liquidity providers. Second, if you are thinking of doing spot crypto, that's probably a bit more complicated when it comes to regulations. And you also need to think about working with crypto exchanges from there, and then how to integrate all these liquidity into a single order book. And last part, I think one of the things that we speak a lot with a lot of retail FX brokers is really that trading infrastructure, right? I think one question that we get asked a lot is, you have to think about whether your existing FX infrastructure can actually support crypto. I think one reason you ask that is also because the market structure for FX and crypto can be very different. Number one is liquidity is very fragmented, right? So in crypto, I think it's a lot better now, to be honest, but you have exchanges that are built on cloud. You have to get used to REST, web sockets, sometimes fixed. Some exchanges do have fixed sockets. But when markets go volatile, liquidity goes up and down, right? So I think that's something that you have to manage. Number two is settlement and custody can be really manual. And number three, it's really the data structure. Because in FX, we are used to probably 2 decimal places, but in crypto, you can go to 8 or even 12 decimal places for some of the altcoins, right? So you have to figure out whether your core infrastructure could do that, or you could work with more build-up infrastructure like TALOS to actually manage the whole front-to-back solution for you. I think that's something that you can also consider as well.
Yeah, I think Pamela summarized really well. I would add a little bit on based on what Pamela said is on the leverage part. So in terms of derivative of leverage, the crypto add leverage in primarily on derivative fashion. But derivative is kind of very different than the CME style. We got the CME style, we call it futures. In crypto, we call it perps. We do have futures, but perps got the most liquidity. And perps got a very single element that might not understand from the Forex perspective. We got a funding rates. It can be plus or minus for each 8 hours. So you need to build a separate settlement system and what we call the reconciliation system just for this trade. And also, if you skip a trade, the fees can be denominated either on a US dollar or either in crypto. So your accounting system needs to change. Not to mention the decimal places, 9 mil.
So I think from my sort of experience being incredibly old, I've been involved in lots of different markets. There's always been this nirvana of having a single client money account that this client has, and they can trade absolutely anything with cross-collateralization and cross-margin usage and everything like that. which I think, as Pamela was saying, it can be difficult because of the different economics of the market. So do you think that's possible, that you could have this nirvana of a single account for a retail broker, a trader with a retail broker?
I'll take a stab at it. I think that this panel has really summed up this market very, very well on the operational side, on the technical side. I don't think that we're there yet to answer a question of, is there a single place where you want to put everything in? I think the questions from the audience and the people in IFX is, do you want to be in a retail FX market that also provides access to crypto as an asset class? And from our perspective, and I'd imagine the people on the panel, is that we'd love to service that. And so there's going to be some teething pains with that for sure. Those have been mentioned over here. From my side, I head up Binance Link, which is everything B2B2C. So this is what I live and breathe. Sagar also mentioned a couple of things on this, on the Prime side. And I'm sure it's the same for the other people on this panel. So I don't think we're there yet. I think we're interested in speaking with everyone on what their needs are and how we can make it easier for your customers to get access to crypto.
So have we got any questions that you've that are burning that you'd like to have the panel answer? Could we have a mic over there, please?
Yes, sure.
First off, thank you for your time. I'm kind of new to this scene in fintech, but I have a background in AI. So you're all in very impressive positions, and I'm sure you have really unique perspectives of this new wave of technology and this new AI economy, as it's called, right? So the pace at which engineering and development of crypto tokens and the whole infrastructure will change. The way communities engage with each other is going to change with this new generative text and things like that. So how are you positioning your businesses, or how do you see the industry as a whole looking at this new wave that's going to happen, right? Like this exponential curve that's starting to take off now.
Oh, I really like this topic. Thank you. Thanks so much. So AI and crypto are, so how to integrate that? Well, what kind of narratives going forward that potentially represent AI and crypto? I would just imagine something, right? So one of the key areas that we are trying to attempt is whether or not the AI generated art could be easily become cryptalized or tokenized and sold easily and cheap, an NFT style. So we attempt doing like that by allowing our 8 million users to create using their profile picture, using AI to create whatever NFT artwork, and immediately going to be sold and trade under different kind of chains in NFT. That's first attempt. The second attempt that we're trying to do is whether or not you can just type in or text your trading strategy and execute in Python code as a no-code strategy. We can no-code strategies and execute with Exchange API. That's something that's an interesting kind of like already trying to attempt in crypto.
I don't have a really intelligent answer for you, to be honest, in terms of the marriage between AI and crypto. But I think AI has many applications for the financial services industry as a whole, which may or may not be applicable to crypto specifically. So, for example, we've seen some applications from AI on the portfolio management side. So right now, obviously, if you're managing managing a portfolio actively, you are the portfolio manager. You are sitting there actively thinking about what allocation should go in what bucket of mine, which asset classes should I allocate to, etc. And I think AI could potentially take over those elements of portfolio management, where you don't have to sit behind a desk and think about percentage allocations to different asset classes. The AI could do that job for you and make sure that your portfolio is managed actively on your behalf. So there are many use cases for the financial services industry as a whole, which are applicable to crypto and to traditional asset classes?
Well, thank you very much for those answers. I mean, I think there are so many opportunities for AI to really change how you do things. If you imagine an AI system could be tracking all of the news that's going on and know that, there's a speech being made by Elon Musk in half an hour, therefore I think he's maybe positive, so I need to look at the tone of his voice coming in and then maybe just buy the hell out of something or sell it. So there's all sorts of things coming along. I think there are certain industries where it's really going to affect. I've told my children who are just finishing university not to become lawyers because that's going to be completely replaced by AI because it's all template-based. So do something more interesting, like become a broker. So thank you so much to my panel. You have been brilliant, and I would encourage you to grab them afterwards and have a chat with them. If you want to know how to actually connect up your platforms into the market, come and talk to us, and we can all, we can make that happen. It's not something that's sort of myth, it's real. You can make it happen now. So thank you so much for your input, and thank you so much for attending.
Thanks, Tom.